This is the early bird update for December the 10th, 2019. We're taking a look at the gold market here on the chart, trading last at 1469.30. Market up. The market is up 430. On the chart, you can see that the daily signals are at 1465. 1465 is the daily average price. On the right of the chart, you see that the weekly average price is at 1465. Now, what I want to point out to you guys here is that whenever I look at the relationship of the daily and the weekly harmonically aligned like this, that is usually a very, very high probability combination or signal that we can identify. And as you can see here, the market has reverted back from that mean daily average price of 1465 and also pretty much on the weekly. And they both have reverted right to their corresponding targets. On the daily at 1469, it was completed at 5:30 a.m. yesterday, and it reverted right back down into the mean. The signal came in again, reverted right back into that target of sell one. On the daily and the weekly, I should say the daily, 1473. So the daily signal has completed the target of 1469 to 1473. And the weekly signal, basically, it has established a bullish trend momentum, and it is on the way to the target on the weekly of 1478. Now, what I do here when I take a look at these numbers between the daily and the weekly, basically is I synchronize the numbers in order to identify the probability factor. The algorithm identifies the highest probability factor when the harmonic relationship is identified, like we see here in the daily mean as well as the weekly mean. And so for the time being, the gold market has completed the daily targets of sell 1 and sell 2 at 1473, sell 1 at 1469 from the buy signal at 1465. So you're looking at a nice trade since the low was made at 1463 here on the 8th of December at 3 p.m. Where do we go from here? Well, depending on the kind of trader that you are, and depending on how you are managing your risk in your portfolio, how you're managing your risk in your inventory, this is very much a personal choice that you make. What I'm doing here is I am being completely transparent with you and showing you one of the most incredible trading tools that some of the big institutions use, that some of these fancy traders use, that they call it, fast trading, algorithmic trading. And so what I'm doing here is I'm taking the mystery out of the whole equation, and I'm pretty much showing you on a completely transparent platform like Tocker, which not only is able to execute the information, the intelligence, but it also is able to verify the credibility and verify basically the probability factor that when we say that when you get up to that B1 level or B2 level, the algorithm identifies that to be as, the highest probability. And from B1, you're looking at a 90% probability. From B2, you're looking at a 95% probability. The same thing when the market moves up to the extreme above the mean. The cell 1 level has a 90% probability of reverting back to the mean. And so right here on this trade, you can actually see the signal pretty much validating that probability factor that we discussed, that once the pattern is completed and there is a 90% probability that the price could revert back to the mean. And pretty much that's what's happened here. 1465 was the daily mean from 69. So that's a $400 profitable trade that this was identified. Now, in terms of where you take the trades is pretty much, again, a question of how you manage the risk of your portfolio. And so what I'm doing here is I'm sharing with you the artificial intelligence of the algorithm that it tells you that as a self-directed trader, what you want to do is you want to trade the highest probability trade that you can identify within the system. And that is basically when the price activates the sell 1 or the sell 2 level. As you see here, it activated the sell 1 level, and once the confirmation is in, and this is what I teach my traders, my subscribers here, is basically the trigger points. How to identify the trigger points, and what do I do once I identify the trigger point? That's all about risk and money management. And what I'm doing here is, again, showing you that I am executing this algorithm exactly the way the artificial intelligence directs you to. And if you're able to be disciplined about executing this artificial intelligence, you will accomplish the 90-95% probability trades that you see, that you see here. And the artificial intelligence tells you that once the target is completed from the previous pattern, in this case, the buy from that 54 level that we've been looking at since last week, then you go neutral. You completed the pattern. You go neutral. You take a break. You let the market tell you where it wants to go next. And in this case, after the neutral zone and you locked in your profit from 54 to 69, that's a $1,500 per futures contract gain. You go flat, you go neutral. We're talking about the futures contract. And we're talking about how I'm showing this trading tool. You, as a self-directed trader, can use it GPS, like I'm doing myself, pretty much in my own trading, which is being verified here in Tocker. Now, the market, using the 15-minute bar on the next closed, you can see here that the market closed below the sell 1 level of 1469 and automatically activates the trigger point. The close was 1467.60. When the trigger point is identified, the stop is automatically activated, and your stop is 1469. Now, with regards to stops, I teach my traders basically that, first of all, not to use straight stops, but to use the stop that is appropriate for your size, for your style of trading, and for your risk profile. and I have a choice of 3 stops. And the first one is basically the most conservative one, which is that once the signal is activated, if the price closes above you go neutral again. That's your stop. And automatically what it does is it activates your below, in this case, the mean. So we already know that 1465 is our target. Our entry point is 67. Our stop is 69 on a close above. The trade was completed at 8:45 a.m. One of the rules that the VCPMI artificial intelligence teaches self-directed traders that want to use this incredible tool is that, first of all, what we're doing here is we are identifying the supply and demand of the market on a daily basis, on a weekly basis, or on a monthly basis. And what we want to identify for ourselves, for me as a trader, is the highest probability for me to do a trade. And so when the artificial intelligence identifies the price to be trading at the mean, after you go neutral, let's say, on your previous trade, or if you are entering to identify a trade as a day trade, you're in a neutral position. And the artificial intelligence tells you don't trade the mean because it is a 50-50 standard deviation, which means that the price can go either way. It can go either above the mean or below the mean. In this case, you continue to watch the market from a neutral position, objectively. Let the market come to you. This is one of the greatest things that the VCPMI has done for me, is that it has taken the guessing out of my decision making. It has taken that uncertainty of, well, where is the market going? Well, if you really think about the function of the market, the basic function of the market is economics 101 of supply and demand. And so when you can identify the average price within a structure, then you can identify the extremes above or below that mean. And we follow the principle of the reversion to the mean by creating a perfect Fibonacci structure that you see here of using 5 pivot levels, identifying the average price that you see here in green, identifying the extreme levels above the mean in red, specifically with Gantt formulas telling us the specific price to enter when activated, as well as the artificial intelligence identifying for you visually that when the price is trading in the red zone, it is a distribution of supply area. And more than likely, you're going to find sellers. The algorithm tells you to go neutral when you accomplish the target. And then this is the trigger point, when the price closes below that pivot point. The pivot entry point was 1468.60. Your stop was 69, 40 cents. Your target was 65. As you can see here, completed at 8:45 a.m. You're neutral. You don't trade above or below the mean. You wait. You wait. Let the price come to you. You continue to wait. You don't trade on the mean. Neutral on the future. All this time, neutral, neutral. Now, When the price closes above the mean, the reason why I don't trade it is because the first thing that I want to see is the confirmation of the sentiment of the market, the confirmation of the trend momentum, bullish or bearish, so that I can identify the climate of the market at that point. And when the price closes above the mean, it identifies the sentiment of the market. Closing above the mean, it bullish sentiment, and it tells me the market turned bullish sentiment here, or the trend momentum turned bullish. When the trend momentum turns bullish, it automatically activates the target above. In this case, the 1469 level that you see here. No trades in futures. Another activation on the daily. The weekly signal that you see here on the mean is at 1465. So now we have activated a daily signal above the mean, generating a bullish trend momentum daily and a weekly bullish trend momentum. The target is 1469 on the balance of your position. Completed at 1 a.m. last night. Back to neutral again. Now, one of the things I want to point out to you here, that when I say that I look for the highest probability to this system, and that's what I'm teaching you here, as an individual self-directed trader, obviously you can make any decision that you want in your trading. And that I find is probably one of the most difficult things to do for some of my traders here that have been around for a long time, and they are full of their own habits. Good or bad, they are full of their own habits. And so what I'm doing here is I'm taking a very specific concept that I have created basically for my own trading, that I'm sharing with people that are serious about trading, that understand the principle of the reversion to the mean, and I also understand the risk that involves in trading these markets, futures, stocks, options, and so on. And once you understand that risk, then you can be intelligent about creating a methodology for you, creating a program, a system, creating a GPS for your trading, which is what I call. Coming back to the chart here, back to neutral from sell one on the daily. Now, the artificial intelligence tells you that when you identify the sell one level at a 90% probability, it doesn't suggest for you to buy, even if you get a buy signal, above sell one. Because if selling trigger is 90% probable, when you go long, you're only working with a 10% probability that the signal is going to be correct. Nevertheless, it is still a 10% probability that the price can move up to test that 1473 and complete the sell to daily target. First time, almost, came right down again to test that 1469 level of support now, because the analysis tells you that when resistance is broken, it becomes support. When the price began to trade about 1469 became the support. The resistance, the prior resistance, becomes the support for the next signal. And in this case, at 5:30 this morning, the market tested once again the 1469 level now and activated a buy signal, completing the target of 1473. Back to neutral. So now we're back at pretty much the sell two level on the daily that you can see here has activated a short signal at 1472.20. My stop is 73. My target automatically is the level below, 1469. So you see the reversion once again. If I am patient and I wait for the highest probability, this identifies that trigger point to go short again if you want to open a position. And automatically you're short at 1472.20, you stop at 1473, your target 69. This gave you an 80-cent risk for a $400 profit that was completed. As you can see here, consistently the VCPMI identifies and completes the targets. What I find really amazing is that the synergy of the price in relation to the signal. So now we're looking at a signal in gold, daily short at 14, activating on the close at 7:30. It's about 5 minutes from here. We're going to continue to update you throughout the day here. So continue to enjoy the live trading room, and I will advise you here in terms of the signal activated. But we are now waiting for the market to close below 1469 at 7:30 to activate a short trigger.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.